Hello and welcome. You're with me here on this special show, and with me today is one of the tallest leaders of India Inc., Mr. Deepak Parekh. Needs no introduction, so I'm not going to waste any time doing that. Mr. Parekh, thanks very much for taking out the time, sir. I heard you say earlier, and I've read you sort of speak your mind, that growth has bottomed. I just want to ask you, why do you say that? Because over the last 2.5 years or so, from 7.5% to 4.4% now, we've heard at every stage that growth has bottomed from the government, more from the government and less from the industry. Why do you think this is the bottom?
Well, there's certain amount of growth on autopilot. Even if we do nothing, there will be a 4% growth. Just the momentum of the Indian economy. Secondly, that is more a general answer. But my view is that agricultural growth, because of the excellent monsoons this year, we will have a 4 to 5% growth in food grain production, which will add 100 basis points to our GDP growth rate. So what we lose in industrial output, we can get back in the agriculture output.
So 100 basis points.
100 basis points extra.
On GDP.
On GDP.
Agri is about 20 odd percent.
I know, but if 5% GDP growth rate, 5% of increase in food grain production brings the prices of food grains also down, brings the inflation down. It has a multiplier effect.
Right.
But I think even the service sector, there was a talk that IT industry will slow down and back office will slow down, maybe because of some tax clarity issues and because of US immigration law. I don't see that happening. Fine, people have not hired, like big IT companies have not hired 25, 30,000 people per year, but they've hired 15,000 and 20,000. So IT growth is still not completely over. IT story is not over. In fact, IT BPO story will generate growth. The financial sector, we are recruiting people in our insurance companies on a regular basis. In our bank, we will have 200, 300 more branches this year. We will have 10,000 more people working. So it's not that employment has come to a standstill. It's not that growth has come to a standstill. So you will have growth. I feel that with the momentum that we have got in the services sector and with the better performance of the agriculture sector, we will see a 5%, around 5. I'm not saying we'll see 8 and 9. For 2-3 years, we will have to live with between 4.5% and 5.5%. But we have to be content with that, because that is what we can get. We cannot expect more.
But can I take it on record that the autopilot growth rate is 4%? Can I go with that?
No,
or that you just sort of...
Autopilot growth rate, I think, is 3.5-4%.
Okay. So from here, from 4.4, you're essentially saying we should accelerate and not decelerate, right?
Yeah.
Ideally, that's the scenario
sure.
that you're working with. Is the government, according to you, and you worked with the government, they look to you for advice, still in panic mode, and should they still be in panic mode? Because what we hear from the government, various quarters of the government, is we're watching the situation very closely. So I just want to ask you, from a market standpoint, who does the watching, and at what point do they decide, well, now is the time to panic, now we should actually sort of step up and do stuff?
No, I think that after the May 22nd announcement of Ben Bernanke, there was panic. Because he said that we will start tapering off the QE, quantitative easing, and we expected to lose a lot of money. Outflows would be massive. And how do we fund our current account deficit? So there was panic. But number of steps were taken by the finance minister that time. And in his own style and in his own way, he's taken a number of small steps, including the FCNRB deposit, including the swap lines with banks, including permitting oil marketing companies to do bilateral trade deals, including buying more crude from Iran. And number of other steps were taken, ECB borrowings by a few public sector companies, where he felt that by that he would be able to replace and augment the foreign exchange reserves, or to take care of the outflow that will happen. So he did take those steps, but those were panic days, that if suddenly they said the FII debt money would go out faster.
But just to go back for a specific point, do you think the policy has been correct to try and make debt more attractive? Because all this has been aimed to do that. And instead of doing that, they could have, that was necessary to some degree, but to the extent...
No, that was absolutely essential, because your basic issue is you have to increase your exports. A basic issue is you have to reduce your imports. So they have taken steps like that. They have taken steps of increasing gold duty.
Right.
Crude, we are helpless. We are totally helpless in crude because we are totally dependent on overseas crude. But on gold, they have taken. On electronics is the third largest item we import, electronics. So they've cleared a couple of plants which are going to make semiconductors and fabs. They've cleared 2 plants with significant concessions. And if you see the numbers, in the first quarter, gold imports have come down significantly to support the current account situation. It's not only because of the duty, but number of other reasons that we will save. So the current account deficit, which was touted as $88 billion or something, has come down to 65 level, $billion level, and that can be easily met through inflows. Long only investors in the equity market, we are the company with the largest foreign equity.
Yeah.
We have not seen exit by long only. In fact, we have seen entry by long only. Some of the hedge funds have gone out thinking that
But the long only real long-term money has not gone out.
It's not gone out.
But let me ask you this. HDFC is the bluest of blue chip companies. I looked at returns, dollar returns for HDFC and HDFC Bank, for example. Last year and 3 years, returns have been negative for both HDFC and HDFC Bank. I mean, this is the HDFC family, as I said, the highest rated and most respected group. At some point, do you think foreigners, these long-term foreigners, will ask the questions, well, why are we here?
The point is that if you take any one short period, you may find negative. This time it's negative more because the rupee has collapsed.
Absolutely.
But dollar returns on rupee. But if you take rupee value, the stock has appreciated. But if you convert it to dollars, but look at when they entered, at what price they entered, and they take an average. And apart from that, you have to understand that this huge amount of foreign money, which is their pension money, sovereign wealth funds, where do they invest? Where is a market which is worth investing? Where is the depth in a market? Where is it possible to enter and exit in a jiffy? Whether it's debt or equity. Since we have streamlined our procedures in the last 5, 7 years, 10 years, India is the largest recipient of foreign money. Look at the other emerging economies. Does Indonesia have that kind of strong capital market? Does South Africa have that kind of capital market? How much can South Africa absorb? How much can India absorb? It's a vast difference. So even if you don't, you have to park your money somewhere. And it's not that every year you get a negative return. If you take a 5-year term, you get a positive.
A fantastic return.
So fantastic return. So you have to have a longer appetite. You must have patience and you must have money for a longer period of time. And we really don't want hot money into our stocks or into our country. We want people who've got patience. And the pension funds keep increasing, ballooning. The pension funds don't decrease, they keep increasing. It's like a provident fund. Which year has Indian provident fund come down? It's increased, it's going significantly higher every year for investment.
So, but that's the point I'm making too. So equity money largely has been loyal money, which has stayed here. It has not really left the country. Debt, on the other hand, is largely speculative, right? Just playing the difference.
Arbitrage. Only arbitrage.
We've gone after making debt more attractive, but equity market is in shambles. The index may be 10% away from a new high, but it doesn't tell you the state of the broader market.
Look at what options does the government have to change the current account numbers. You cannot start exploration tomorrow and start getting more oil and become more dependent. It's a long-term process. You have to have policies that will attract foreign investment in oil exploration if you want your import content in the crude to come down. It has to be a long-term solution. It cannot be a short-term. Today we are firefighting. It is a band-aid. But what we have done or what the government has done is to ensure that we don't fall in the trap, that we are unable to fund our current account deficits, that our reserves collapse to a certain level, that we get re-rated, we get downgraded. Every step is taken to avoid a downgrade.
So just on that point, but as somebody who knows how the government functions and people in the government and how they think, I agree, enough is being done to stave off the crisis, and maybe the crisis has been staved off. But honestly, do you think real reform is happening, which is not to stave off this crisis, but which actually takes care of the next 10 years, 15 years, that kind of reform? Have you seen anything over the last 2 years?
You see, the point is that equity market reforms, if you want.
I'm not talking about equity market reforms. Any kind of reforms which make a country attractive for foreign investors to either put money in stocks or put up plants or bring in money, essentially, bring in dollars.
My view is the one single point the government has to do is how to make business work easier. Doing business in India is very difficult.
Right.
And unless we change that, even in that World Bank index of ease of doing business, we come right at the bottom amongst the last countries. So ease of doing business, clarity in your laws, clarity in your FDI provisions, clarity in your taxation. We need that because people want black and white. People don't want grey. Right. Everything in India is grey, unfortunately. And our lawmakers or our bureaucrats have to ensure that no tax will be paid for this, tax will be paid for this. Nothing in between. That you go for an opinion, you go for a prejudgment. That doesn't work.
And how much of that has happened?
That is what has happened. It has happened in taxation in back office. It has happened in transfer pricing. It has happened in capital gains tax. It has happened in permanent establishment. PE of a PE. It's happened everywhere. But we need reforms in these sectors. Even FDI and retail. FDI and retail came with so many clauses and conditions. So we need to be sure when we come out with policies, and I'm sure the government realizes that.
No, so that's what I'm asking you. How much of that is happening? How much of some of this, what you're saying, is on the mind of policymakers, politicians, that this needs to be done and not just...
See, at the moment it's firefighting.
We are still in that mode.
We are firefighting. We have to ensure that there is no crisis. We have to ensure that we don't get downgraded. We have to ensure, and so we have 3 years. The FCNR deposit will give you, it's a 3-year deposit. It gives you 3 years to make structural changes. What you are saying is we need structural changes. And we need those structural changes to improve the long-term prospects of the country.